I think, around 2% and closed off. We have retraced our steps quite significantly. I mean, you can see the US indices daily change so far today. We've got S&P up 1.89%, the NAS 100 US Tech Stock Index 1.74%, and the US 30 Dow Jones is up 1.42%, sorry. Currently, good afternoon, ladies and gentlemen, and welcome to the Markets Now session today on a darking, windy and wet 13th of October. Hello there, Matthew. Good to see you, mates. Good afternoon to you, Cora Tim. I can see we've got Scotty D in the room as well. Good afternoon to you, sir. Hey, man. Hope you're doing well. So, yeah, it's pretty damn cold out here at the moment. Not very nice. I'm averaging cold hands most days at the moment. Tell you what, I had a good weekend this weekend, and I went out. Well, as I usually do, I usually live most of my life on two wheels, so I was out on the bike yesterday, but I had the little one with me, and do you know, 8 years old he is, and he did 21 miles and a 44% incline on the bike as well. So 44% of the 21 miles was uphill, climbing. We did 1,200 feet elevation. Can you imagine that? 8 years old. I'd say I was lost for words yesterday. I really was. I was so proud of him. He's an absolute machine on the bike. He really is. I'm pushing him to get into some sort of competition format and compete a little bit, I think, when he's a little bit older from now. But yeah, he's got something special. He really does. He's absolutely incredible on his bike. So yeah, that was my day yesterday. Pretty quiet weekend otherwise. How about you guys? Do you guys have a good weekend? Good couple of days off. Chilled weekend with the family. That sounds good. Yep, I certainly like those. Saturday was working, but chilled. Good afternoon to you, Jack, as well. Good to see you, man. Yeah, we're in the season now for chilling, aren't we, really? Especially in England. It gets it's getting dark really early now, isn't it? And when you wake up and it's dark, I mean, it's like, it's permanent. It's almost permanent darkness for the next 7 months. Hopefully we'll have some sunshine at some point, though. We can but hope. Scotty D, me and my missus looking at moving to a new place in a few weeks. Wow, okay. Good for you, mate. That'll be your first time, won't it? Moving in with someone? Hoo-hoo! He's in for a treat. Yeah, that's right. Yep. Can't wait to hear the war stories, man. Good luck. Yeah. That's good. It is good. It's really good, to be fair. It's nice having that independence and having your own space you can do your things with and sort of, yeah, get that space around you. It's good. It's positive. So good for you, mate. And good luck indeed. Matthew, not too bad, working and got some nice dinner. Ah, very good. Yeah, very good. After we got back from our ride yesterday, the whole family decided to order takeout. So we did enjoy takeout last night, which is quite nice. Ate way too much and felt probably like I should have been wearing trousers 3-4 sizes larger than the ones I did have on. You know the feeling. You know the score. All right, team. So this week, look, it seems to be the running theme at the moment, but it is yet again a very quiet week with the fundamentals. We did cover this on Friday, but for those of you out there on YouTube currently as well who will be watching this, good afternoon to you all. First of all, good to see you. And yeah, I did mention to the guys inside the trading room on the Friday, on the flow down session we did last week, that it was yet again another very quiet week this week in terms of what we can be expecting from our market. Now, on Friday, we did indeed have a pretty significant sell-off across a lot of our trading assets. So we had the US indices and European indices, all of which fell, I think, around 2% and closed off. We have retraced our steps quite significantly. I mean, you can see the US indices daily change so far today. We've got S&P up 1.89%, the NAS 100 US Tech Stock Index 1.74%, and the US 30 Dow Jones is up 1.42%, sorry, currently. So they are coming back quite speedily, but Friday was predominantly caused by Donald Trump yet again and his tariffs being slapped on China. So it was a trade war reaction that the markets had, which is why we saw that big sell-off on Friday. We also, and it doesn't occur to him, I think it was you last week, wasn't it, that mentioned about the NFP numbers. This week, we were anticipating the Wednesday CPI. And I'm not losing my mind. Do you know what? I actually did lose my mind. I got worried that I was having some kind of forgetful moment of talking about CPI last week when I realized that the CPI has been removed. So due to government shutdown in the US, the CPI numbers are no longer being released this Wednesday, I expect. So we actually have had the highlight, the main event of the week that we were initially going to be looking forward to, no longer available, which is really frustrating. What this means is it essentially leaves us with two main events, which we'll come onto soon enough with the economic side of the report. But we have the Fed Chair Powell speech, which is going to be on Tuesday evening, 5:20 GMT. And we have Thursday's PPI month-over-month data, which is looking at a 0.4% uptick. Now, of course, there may be a little bit of a volatility strike from the PPI, but it's not going to be an event for us. CPI, it's a big one. We like trading it. We like having some fun with it. So I was looking forward to actually having something exciting to get our teeth stuck into this week and trying to catch off a few decent trades as a result. But yes, that one has been removed. So now we are left with the Fed Chair Powell speech and the PPI data, which are going to be the two main events of the week. Honestly, guys, the PPI is not going to be a main event. I think my algorithm measured it a 4, possibly out of 10, maybe a 5 on the broad spectrum one. So it's not going to be of the kind of quality we're looking for to get off a bunch of trades on it. And the Fed Chair Powell speech at this rate, I mean, I don't even know what to expect from that one, but we've only just had a big one. And that was last week, I want to say. And we did, there were some pretty decent key highlights from that one. I discussed that already and possibly will do again for this one, but it's not going to be something that is going to really shape the markets this week in particular. So again, it's going to be a pretty organic week. We're going to be relying on that organic trading volume as we have done for what seems like ages now. I mean, this has got to be the 3rd or 4th week where we've had just a complete shutdown in data and the markets have come to a grinding halt, apart from the Friday, of course, where Trump was issuing new tariffs on China and we get a really big seismic shakeup in the markets as we saw. But anyway, that being said, we will get cracking on with the market analysis report. So, first of all, last week, we did end up on Friday with a 3.43% net return, which, I got to be honest, is pretty bloody good. That was thanks to Friday. We managed to bag about 1%, maybe just shy of, I think it was a 1% day on the Friday. Oh, of course it was. It was right in front of us, look. So it was a 1% day on Friday. We did have the Wednesday up at around 1.6. Thursday was closer to, sorry, Wednesday was 1.4. Thursday was 1.45, I suppose, looking at that there. So we did have three relatively decent days. We had a drawdown day on the Tuesday that was minus 0.25%. And the Monday, we didn't actually take any trades at all. Now, this wasn't over many trades. There weren't many trades in the book last week. I can't remember exactly how many trades there were. I did release the end of week trading performance report, which is available for all of you to go and have a sift through. But it wasn't a great batch of data, to be honest. A very slow week. And I would expect almost the same to happen this week as well. But I've outlined my thoughts here, the portfolio breakdown and the weekly return as well. It was pretty, as I say there, I was just about to say, it's pretty directionless markets. A lot of ranging stuff. We kind of, I suppose, got lucky in certain places, got a bit unlucky as well with a couple of our trade ideas. If you recall, a couple of them triggered and went to stop loss immediately, and then subsequently afterwards went straight to target profit. So that was a bit annoying, but yeah, it was all right overall, and we came out in the green, which is the main thing. In terms of market exposure, indices, as always, was sit at the top, 62% exposure. The FX market, 20%. Commodities actually took 18% there, so it's pretty balanced across FX and commodities as well. Given that I swear I called a quit to the FX space twice, I think, last week in the same week, it goes to show just how little trade ideas we actually ended up taking. So moving down then into the portfolio metrics, 126.58% so far this year. We're coming to a real slowdown in trading volume here, team. Real big slowdown. So I don't think we will necessarily see anywhere near the 200% level for a single year, which, you know, is an insane annual return anyway. But I'm just saying, I know I have probably come out and said over the course of the last few months that maybe we could see, you know, close to 200% at the end of the year. I just don't think that's realistic now, judging from the momentum in the markets currently and the state of our current returns. Looking at the monthly figures, we are down at 12.7%. So that's on average, not too bad. Risk reward ratio again is unchanged. Weekly return 3.1%. That's pretty damn average for us at the moment. So nothing to really moan about there. September's trading volume was up here, probably doubled the trading volume of August. October, we are off to a start, although we at the same time are on the 13th of October. So we're kind of getting towards that halfway point. At the moment, trading volume is very low. We've got a lot more sell side opportunities than buy side, as you can see there. So it'll be interesting to see where that one kind of ends up over the course of the next couple of weeks as we close October off. And then finally, last week, we had the S&P, which actually ended up closing at a minus 4.2%, and the UK FTSE minus 2.55. Now, when I was actually looking at these at the end of last week, but at about 3 o'clock in the afternoon, these numbers were incredibly different. So it goes to show just how much they fell on Friday evening as a result of the trade updates. Now, moving into market trends and opportunities, we have the NAS 100, NZD USD, UK Brent oil market, and gold. Now, with the NAS 100, we are looking ultimately this week, guys. It's all about the buyback, the continuation. I mean, the NAS 100 currently 1.73%. It's actually bolstered itself since being on the session this afternoon. And I have no doubt that we will be achieving the previous highs, if not completely smashing them and continuing with the trend as they usually do. There is an ever more growing presence of bubble fears around AI companies. Now you have to remember that the AI thing boomed and has been booming for 3 years now. Everybody, and like I said last week, everybody and their brother is setting up a new AI company. It's all the same AI model. It all comes from ChatGPT, but now it's being built into and fleshed out in basically every facet of our lives. The thing is, the US tech stocks and the S&P 500 in particular have been propped up on this, and no pun, but I guess pun intended, artificial stock prices from these artificial intelligence based companies. So we have this huge cyclical event almost where all of this capital inflow is heading into the markets from these AI companies, but but it is going to come to an end, just like the dot com bubble, and just like every bubble that we've seen thereafter as well. Up until this point in time, it is a cycle and it will come to an end. But because of the inflation that's come as a result of this AI stuff and the nature of the rest of the macroeconomic perspective as well, especially with the US, it's a ticking time bomb. And so it's something that needs to be watched. You guys need to be really plugged into that at the moment because, you know, there's going to not only will it will generate a lot of trading interest for us as our kind of intraday day trading markets go, but a lot of people are going to lose a hell of a lot of money in it as well because there will be a lot of long-term H&W clientele in those stock indices, which have built a lot of their wealth. I mean, look at the wealth growth over the last 3 years since AI was a thing. I mean, I don't think you can actually find the connected dots. I mean, obviously you would do somewhere, but if you just look at wealth generation over the course of the last 3 years and completely in line with AI and the way that's boomed, that wealth generation and creation has been directly connected to the growth of AI. When the AI cycle ends, where's that wealth going to go? I have a strong feeling it's going to be given back. So we could be, I think maybe Q2 of 2026 could be a seriously turbulent time, possibly before then. But I would say Q2, Q3 2026, it could be a really turbulent time. And we could be looking at shaving off a hell of a lot where the stock prices come back to a more realistic value than their current just no there's no no ceiling in existence kind of attitude that they've got at the moment, right? We've had inflation be an incredibly big problem, and everything else that's going on, the trade wars, the tariffs being slapped around everywhere by Trump. What have the markets done? They've just gone one way. They've just rallied relentlessly. So I think we're going to wipe off a hell of a lot of that money when those markets come back down, and then we'll have to reevaluate where things are when the dust settles. But it's an interesting one. It's a really interesting one at the moment. So I think if you are interested in that kind of stuff, you should definitely consider plugging into some of the news updates and stuff around the AI cycle, the AI bubble that we're in. Anyway, moving on. So NZD USD next up. We've got a break close and a retest liquidity structure up there. That's pretty decent. There's a really wide margin on this opportunity. I don't realistically think we're going to actually get down there this week, but it's just to outline my thoughts that trend continuation is a strong possibility with the NZD USD, and I would like to think that we may be able to capture several decent trading opportunities on its trajectory down to that low. This low is the major point of inflection in the NZD USD, the next one in line. So I think if we can manage to get a couple of decent trading opportunities off inside that space, that would be really nice. Going down here to UK Brent, we've got another very stereotypical break close and retest of liquidity going on at the moment. Possibly come back up, get a deeper retest into this area before the continuation to the downside. We've got a pretty decent case of oversupply going on still, and the demand vacuum has not happened yet. It's just a geopolitical thing, right? It's just a waiting game. It will happen, but it's not happening yet. It is taking its time. So just short the hell out of it while we can. And then finally with gold, there's no way we want to be, considering long-term shorts in this one. Might get a couple of intraday shorts again back down to this low here and then continuation. But ultimately, guys, as far as we're concerned, it's long, green and strong the whole damn way. And there's nothing that's going to be getting in the way of that. So as we move down into market challenges this week, of course, we did have the CPI event, which is now closed. So in its case, we've got the Fed Chair Powell and the US PPI. I actually made a mistake earlier. So US PPI is registered as a 3 out of 10 in accordance to our trading opportunities. So that's, it's not going to be a big one. And the Fed Chair Powell speech is registered as a 5 out of 10. So actually a little bit more volatility expected from this than that in our markets this week. And then as we move down into the state structure volatility index, a lot of red on there, I would say, which I suppose is, I mean, it's really interesting to see various asset classes. Of course, we got stocks, FX, commodities, we got energies, metals, and it is a hell of a lot of red. We've got 35.74% liquidity is long in the NAS 100 currently. That's a crazy figure, I think. We've got UK Brent 43.19% long. That makes sense. What about gold? It registered a 39.44% net long out of all commercial tractor liquidity there. So I mean that's crazy. I think. I mean, looking at this damn thing, right? I mean, that's absolutely crazy. So, but what it does show is market sentiment. In a broader sense, it's not such a finely detailed depiction of market sentiment, but from a broad sense, that is what we're looking at here. It's a lot of money essentially coming out of longs and coming out of buying into the market because of the state of the market and people's worries about various different things going on around the world at the moment. I mean, to see to see that much red, I don't think we've ever had a report that's shown that level of that level of data in terms of what's the word I'm looking for? Synergy between all of the asset classes there, and a lack of buying interest. So that'd be an interesting one as well. I mean, the VIX is 31.81%. Soon enough, we'll be bloody down into the single digits of the damn VIX soon. Volatility at all-time lows. So that's that. And then we have the Economic and Order Book Impact Report. Now, again, Fed Chair Powell's speech. Both of these are just an uptick in terms of broad market impact. So US PPI is a 4 instead of a 3. Fed Chair Powell's speech is a 6 instead of a 6 instead of a 5. In terms of broad market impact, it's 25% across the board in terms of asset class exposure that the economic events will impact. We didn't have a single move at all, in literally nothing in comparison to last week in terms of the buy side versus sell side interest. And then equities in focus this week, none really a notable call out apart from the spotlight equity. I felt that this week, which is why it's so important to watch the video of the market report as well as actually read the report. When I was listing out the equities in focus of my top picks, I really was clutching to try and find some decent buy side opportunities. West is probably the best one out of all of them. So maybe consider West as an opportunity. DSP and Magne, I think probably going to leave those alone until another week or so. And they're quite on the, I don't know, just on the fence at the moment, whether they're going to be buy side this week or just continue on in their current range. But the spotlight equity of the week this week is a good one, and I am feeling pretty good about them. Hallador Energy. It's got the room to breathe. It's got the room to grow. It's had some really decent data recently. They're making pretty good steps in their field. It's a strong stock. It's nothing magical about this one, but it is a strong stock. So I think there's going to be some decent money making opportunity there for you guys as well if you can find fractional shares available on any of the basic retail platforms. And then we've got institutional buying interest by sector. Again, nothing's really changed over the last market report. Obviously the capital inflow has changed a little bit, but not by too much. I mean, we've had another 3.1 billion in AI tech, financials 2.3, metals 1.4, and energy markets have had a 1.1 billion capital inflow since the last that we checked. So yeah, it's some pretty big money. Financials, interestingly, still in second place. I don't know if there's anything more in that, but it's interesting to see. And AI tech, of course, yeah, 3.1 billion additional capital inflow over the weekend. And that's where we are. So for the benefit of all, the information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. Please, if you wish, read the full disclaimer down at the bottom of the market report in your own time. Now, let's hop over from the market report. Let's start flashing over to some charts and see where we're at from there. Let's get ourselves ready for this afternoon's US Open, where maybe, just maybe, we can we can get ourselves a decent trading opportunity somewhere. That would be nice, wouldn't it? So, of course, we have to deal with all of the backlash from last week's tariff news from Trump. Obviously, the markets had these enormous moves down, wiped out a lot of retail liquidity in these moves. Let me tell you right now, I bet there were a shed load of people losing accounts on Friday. But nevertheless, we are not some of them. And hopefully, we're going to be looking at getting some decent trading opportunities off this this day, or yeah, the beginning of this week. So let's have a look at the 15-minute time frames. Then let's try and build some context. So as of right now, all three indices are trading back slap bang in the middle of their available trading margins. That's a bit annoying. It's not an ideal setup for us, but I think what we're going to have to do, because the margins are so wide on these, we're going to have to split it down the middle. So what we'll do here is we'll have, of course, the upper half and then the lower half, and we'll try and have a good mix of our data. Sorry, a good mix of our data, a good mix of our available trading margin up and below, and then we'll try and work things out either side. So I would say that a decent break of structure. I mean, are we really going to be looking for 25.14 today? I just don't see it happen. I know Mondays do surprise me sometimes, but I'm thinking about the aftermath of what we've learned, especially over the weekend as well. I'm just not entirely sure. I think I would feel more comfortable looking for that as a realistic long margin. So what we'll do here is set ourselves up with a long. We're going to look at an entry point at around 24.89, targeting this level in here at around 24.994, with a stop loss at the 50% point between those two areas here. So we got the breaker structure and the main point of liquidity. That's going to yield a 1 to 2.44, which is not bad at all. So that's going to be long number one. Now you have to remember, team, that that is a significant jump from where the asset value is trading currently. So if you imagine, if you imagine we reverse the chart here, this is catching a falling knife, because the market's going to be dropping down here. It's going to have to work its way through liquidity. It's then going to break structure, and then we're going to be in the realm of taking the trade. So please proceed with caution. I'm not saying anything additionally needs to be done apart from keeping an eye on it a little bit more than you usually would. Usually, we're very relaxed in our approach to the markets. We're arguably borderline blasé at times. Don't be with the NAS 100s long today. It will need a hands-on approach. If the market breaks structure and comes up and then comes back down, I would honestly be considering getting out early. Possibly if I wouldn't care about it hitting the red, but let's say it comes back down into like this territory in here at 24.867. Possibly look at getting out early today, just based on everything that we had over the weekend and on Friday afternoon. So looking at the short, very different kettle of fish for the short. Really liking this level. Beautiful breaker structure point there. And we are pretty damn close to it now. We've got a beautiful trading margin back down to around 24.37 as well. All looks really nice and healthy for the short. So I'd have the target profit at around 24.368. Access point of the trade 24.555 with a stop loss, nice margin above. And that's going to sit you at around a 1 to 2.7, net returning 0.68 on the net return point of view. So that's not too bad at all. And that would be the NAS 100. Now, in terms of the US 30 Dow Jones, big gap up here. Obviously, we ended the week there at around 45.14. We gapped up, opened way up above at 45.82. We, again, very similar to the rest of them. We're trading at the sort of center point of the all-time highs and this retest low. What we will do here is break it down into two halves, and that will be the format that we're going to be using today. So we're going to have the upper and the lower. The upper half on the US 30 Dow Jones is problematic. I'm just literally, saying this as I see it in real time. We've got this anchor point in here. So the trading margin for this trading opportunity is going to be above there. The other problematic area is the fact that we have a relatively decent area in there as well. A lot of highs in the market. There's been a lot of commercial activity at around 46.40, hasn't there? So the true trading margin then would probably be sitting up above that one. But then above that one, you've got this level. And then it just becomes a bit of a yeah, it just becomes a bit of a mess, doesn't it? So it's going to be very high risk taking along in the US 30 Dow Jones today. I would be favoring the short much more so. We have the point in which we're trading against currently, but I think if we can clear out a lot of these highs, you see on the left of the screen here, lots of these highs where commercial change of hands has taken place. I think if we can get this level broken through, clearing out these highs, clearing out these lows, that's going to be really nice to paint the way for a move back down to 45.20. So for me, US 30 Dow Jones short, open at 45.638, targeting down there at around 45.234 with a stop loss, a decent margin above at around 45.774, yielding a 1 to 3 return, 0.75% in your back pocket. So that would be really nice to manage to achieve that one. Looking at the available margin that we have now between this breaker structure point and the level above, it's actually not too bad for a trading opportunity as well. So I'm thinking if we could get down into this area down here and then bounce back, I wouldn't actually be too against the idea of taking a very short term in and out trade between these 2 points in time as well. So you could possibly be looking for a trading opportunity like that, which is still yielding a 1 to 2.64. But that's only on the proviso that the market reaches this level, it does not break through it, rejects, and then comes up above. So for those of you in the room who maybe not absolutely attuned to the system, it might be a little bit of a difficult one for you guys to carry out. But please, don't let it put you off. Get it on a demo account, or if you just want to have a stab at it, then it's your prerogative, isn't it? But that one might be a little bit difficult to carry out for those of you who are slightly more inexperienced. Good afternoon, Kelvin. Good to see you, buddy. So that's the US 30 Dow Jones chart setup. And then finally, I am going to give you the S&P today. The reason I am going to give you all three and not just the US tech and industrial indexes is because all the setups, they're all so similar that the opportunity, there's no reason really not to. But I like the S&P because of the long that's available. Because if we look at the breaker structure here, we don't have this disgusting area where there's just a shed load of carnage happening to the left-hand side of the screen, like the US 30 Dow Jones, for example, which frankly has so many points of interest, it's very difficult to navigate. But the S&P is not necessarily like that. We've actually got really clean trading margins above and below. So what we're going to do here is bring down this one first of all. And let's say we're going to have that. I would say probably have that one around there. We're just going to make the best of a bad situation with the price action, because it's quite choppy to the left-hand side. But we've now got a really decent margin to work with. What I would be saying about this one, we've got this area in here. Just about there, I would say. Let's just widen that a little bit. So about there. And on the downside, there we go. So on the downside, we've got this area in here. I'm going to have that about there. I'm not going to worry about this too much because that doji is the weekly open. So I'm not going to worry too much about that one. I'm going to have that there. And now with the S&P, we're going to have an entry here down to there with a stop loss about here for a nice, modest 1 to 2.2. Absolutely great trade. And we're going to have a long on the other side of it above there, targeting here with a stop loss about there. And that's also going to yield a 1 to 2.2. I'm probably going to increase the stop on that one to a 1 to 2 on the dot, simply just to give myself a little bit more of a margin above that breaker structure point. And I like that one as it is. Now, these trade ideas, guys, okay, for those of you who are not here every day regularly, and for those of you on YouTube, these trading opportunities cannot be taken before the bell rings. Just want to say that absolutely crystal clear, so there cannot be any kind of subjectivity. These trading opportunities that take place in our stock indices will have to take place after 2:30 GMT, which is in about 25 minutes time. They cannot be taken before. We are not trading the pre-market today. Okay. But that's it. And they're all based around 0.25% risk with a really solid risk reward ratio overall. So they all look great. They all look really good, to be honest. The only one I'm a little bit concerned about really is that NAS 100 long. That's the only one that is a bit of a cause for concern for me personally, just because of where the price is trading currently and where our entry is. But it's not the only long of availability. We got the S&P 500, we got the long there, we've got the US 30 Dow Jones as well. If it can get down to here first, we might have the opportunity for a decent long in there. And we've got shorts across the board as well. All right. So, with that being said, ladies and gents, are there any questions or anything else that I can help you with today? Any questions, any queries, anything that you might need a hand with? I'm going to write you. Okay, Calvin. Yeah, no worries. Feel free. Scotty D, you're all good? Good man, yep. Cora Tim, can you have a look at BTC? Yeah, of course I can, man. Yeah, of course. Let's have a look. All right, BTC. Currently trading at 114. Let's have a look at the daily first, get some context. It's been a choppy time for BTC at the moment. Very, very heavily connected to our US indices as it usually is. We've been up against the high for a while now and sort of range-bound market state structures. So there's not a great deal to report on at this stage. What we're really waiting for is the break of the high. Or the break of the low. I mean, if we get a break of the low, there's a real significant margin people are afraid of down here. Those of, for the BTC guys out there. If we break this floor, I mean, especially if we break structure here, we break this area in here, that's our last line of defense. And if we break through that, excuse me, it's a long way down. We could be looking at 75 before long. But whilst we hold above this area, we're okay. And in my view, excuse me, sorry. In my view, it just continues to hold its current gains, and we continue to range before it goes ready for its next leg up. But it is significantly affected by US fundamentals more and more nowadays. So do be aware of that fact. In terms of intraday trading opportunities, if you are so inclined, look at this and then look at the stock indices that we've literally just covered, because it is very, very similar, incredibly similar. So break a structure, floor trade back down to 108. You've got the ceiling trade. You've got a decent margin in BTC as well. You'd be looking at about that area there for a TP. And you would be looking at a break of this level for your access point to the trade. Stop's going to be somewhere 50% point in between there. So you've got your intraday trading opportunity, and you've also got your long-term view on the daily. All right, Cora Tim? No problem at all, sir. All right, guys, I'm going to wrap things up there then. So please feel free to come and try out the trading room for those of you on YouTube. If you haven't done so already, we've got a bunch of friendly, happy-faced people in here, and it would be great to get to know you guys out there on the other side of things. Remember, there isn't a cost barrier. You can join the basic tier in the general chat, and you can come in, spend your Wednesdays in the afternoon events and stuff like that, which again have no barrier to entry. If you want to take up, additional classes and have the live sessions on a daily basis and stuff, you definitely can if you want. But there's nothing stopping you from coming to try us out regardless. And for those of you inside the room right now, have a fantastic afternoon. Good luck in the trading session. Remember to hit me up. Let me know how you get on if you can. And I look forward to catching up with you guys in the next one. So take care, everybody. Great to see you again. And I look forward to catching up with you soon. Laters.